Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. The two big reports we're looking at today. First off, the monsoon session of Parliament has ended with no forward movement on key pending bills. And second, we look at China's central bank slashing the value of its currency, the Yuan, thrice this week between Tuesday and Thursday, devaluing it by 4.5%. What is the India impact? But first, the monsoon session of Parliament has ended with no forward movement on many key pending bills, perhaps the most crucial of them being the constitutional amendment bill to enable a common goods and services tax. Now, industry is not happy at the logjam. Some 15,000 business leaders were part of an online petition seeking breaking of the political stalemate and a way forward for the GST. Here's a report.
A full session washed out, no legislative business, key bills in limbo, among them the first April 2016 implementation promise for the GST almost down the drain.
House is adjourned till 2:30 p.m.
Indian industry has stepped forward demanding accountability. 15,000 people, including the nation's top industry leaders, have launched an online petition calling for an end to political stalemates in Parliament. Bajaj's Rahul Bajaj, Infosys founder Chris Gopalakrishnan, Heroes Pawan Munjal, Biocon's Kiran Mazumdar-Shaw and others collaborated in a signature campaign, saying recent events have been disheartening. They have the potential of eroding popular faith in Parliament. Perpetual disruption can never be the rule. The words echo the finance minister's stated frustration at parliamentary disruptions and delay in the constitutional amendment bill to implement GST from the next fiscal.
बिना कारण पार्लियामेंट्री पैरालिसिस हो, ये दुनिया के किसी भी लोकतंत्र की भावना के अनुकूल नहीं है. जो मेजर लेजिस्लेटिव बिजनेस था, उसमें संविधान संशोधन जीएसटी का था. उसका एक स्पष्ट लाभ देश को रहने वाला था. पूरा देश एक इकोनॉमिक मार्केट बन जाता.
The principal opposition party has been quick to hit back, turning the blame for the deadlock on the government.
Let the government respond to our demand for a discussion and arriving at a consensus on some fundamental objections that we have raised. We want GST, but we want a good GST, as good a GST as possible. Certainly not this GST riddled with problems and issues.
It goes beyond GST. The land bill and the real estate bill are other legislations stuck because Parliament does no work. The only window of hope for the GST implementation targets is the possibility of a special session by the month end. But even before that, politics desperately seeks some meeting ground. Krishnanand Tripathi's report for Rajya Sabha Television.
Well, joining me now, Shankar Iyer, senior journalist and columnist, Kunal Bothra, head analyst at LKP Securities, Prashant Deshpande, senior director at Deloitte, and Madan Sabnavis, chief economist at Care Ratings. Gentlemen, thank you very much for joining us. So, Shankar, let me begin with you. Disappointment or to be expected?
Well, the bitterness that preceded the session sort of set the tone for the session. It is disappointing, but it's not a surprise. It's not a surprise also because every major reform, legislative reform in India has taken 10 years. Last session, we saw the passage of the insurance bill, which took from one Sinha, which is Yashwant Sinha who introduced it, and finally Jayant Sinha piloted the 49% raising of caps on FDI. You look at the Companies Act, the first committee was set up in 2003. It finally was passed in 2013. You look at defense FDI, Kelkar committee was appointed in 2003. It happened in 2014. Right. You look at the land bill, 2005, 2013. This seems to be, we are running through a dangerous pattern of a decade of decay. And I don't think the political parties get it, that economic policy cannot be fitted into political cycles because economy works on economic and business cycles.
Right, and which are obviously much longer than 10 years.
Yeah, look at the opportunity lost.
Right, okay. So let me get a market perspective, Kunal. So was this priced into the way markets behaved or was this a surprise?
Well, I think it was a surprise because I think, if you look at the last 1 year of this, more or less one and a half year of this new government, I think, this was one of the most anticipated bill, GST per se. And I think over the last 1.5 years, I think the markets have gotten small, pointers to really take away looking at the projections for the next 3 years. But I think this was the most awaited reform. Looking at April 2016 as a deadline, as probably the projections where the finance minister is expecting to launch or to roll out GST. I think this session of monsoon parliament was very critical from a market
perspective. Is it seen as a failure of the NDA government or something that they could not help because things changed so dramatically?
I think they could not help it because the things changed
so
dramatically.
To that extent, the market is being accommodative.
Exactly. They were open to a debate, as such, but because of the happenings of the parliament, it really did not happen. But I think the markets have to price this in somewhere, and I sense that probably there could be a disappointment over the next couple of months, which can actually point out to probably economy not growing as fast or as sooner, which was expected.
So there is a downstream impact which is going to be felt. Madan, this is a good point to bring you in. What's your sense now? I mean, now that GST is not likely to happen for a while, if we are lucky, I guess it will happen by April 2016 as per the original deadline. But how are you looking at the overall sort of impact of this?
So the overall impact, I think, has to be looked at in two ways. See, one is that I think the way in which things were conducted in this particular session, it sets quite a dangerous precedent for future, because even in future, if whichever government is in power, I think the opposition can always stall discussion by just making a noise and ensuring the discussion doesn't take place. I think that's a very serious issue, because even in the past we have seen sessions being stalled, but I think what's happened this time has been of a different kind of a dimension. Now, on the economic front, I think the fact that neither the land reforms nor the GST have actually come up with discussion, and probably there won't be much action even in the next session. It does look like that the GST may not really get through in April 2016. Now, we were all banking a lot on the GST to bring about increased levels of efficiency within the system to make sure that the corporate sector is able to function better, things get streamlined, and we're able to get rid of a lot of red tape and corruption which comes along the way when you have to get your permissions and pay lots of taxes. So I think this has been the last part of the agenda of doing business becoming simpler, something which the government has taken on with a lot of enthusiasm. And I think the last part of it is rather sad that we have not been able to actually get this through. So I think we'll probably have to wait for some more time before it can really come up for discussion and then get resolved.
So, Madan, I'm going to come back to you on the impact in terms of numbers in a bit, but Prashant, what's your sense? I mean, there is a lot of work that accompanies the GST, and we're really talking about GST right now. The bill is one part of it. There is another part which is laying out the actual roadmap, doing all the process work behind it. Where are we on that?
I think because the first step has not been achieved, the roadmap has not been set, which is kind of a disappointment, because if we are looking at 1st April 2016, as the finance minister keeps on repeating, then he needs to have a roadmap. And because the constitutional bill is not in place, I think he's not been able to set that roadmap. Lot of things have to be done. Business processes for the governments have to be set out. There is going to be entire restructuring of the departments. And all of this, apart from the goods and services tax network that GSTN that we talk about, we don't have a clarity of readiness of the government to implement the GST from 1st April 2016.
But could they be doing that if the bill does not get passed, or is that something more of a nitty-gritty nature?
Well, they might be pushed into doing that, getting ready. But I think if you look at the processes that have to follow, such as putting out, getting this through the state legislatures, and then state legislatures coming out with draft legislations of their own, such as CGST and SGST. We do not want those legislations to be out in the public domain in the first quarter of next year, just before it is to be implemented. I think as an industry, as a consumer, we need time to absorb, to get ready, and to be in a position to comply with the law when the GST is implemented.
Right.
So we need a clear 6 months term at least.
Okay. So let me take a step back. So, there was a petition which was filed by many leading industrialists, 15,000 known at least so far. Why is it so critical for industry?
It is very critical because, there is one unanimity I find, and whoever is opposing the passage of the bill also agrees that GST is going to be good for the country. And if that is the case, the more it gets delayed, And if we are unable to meet the deadline, it would be disappointing for the country, it would be not good for the economy. And so my colleague speakers also will be talking about how it will become a big setback for the country as such.
Right. So, Madan, let me come back to you. In terms of GDP growth, what's the plus or minus that could happen because either the bill will not make it in time or if it will make it in time?
No, actually, Govind, I'm a bit skeptical about these numbers when people say that bringing in the GST will actually increase the GDP growth of the country. Because it would have been in case it's been a limiting factor. Because the kind of question I would say is that, have we ever had a situation where demand has not been satiated because of the fact I've not been able to supply the goods on account of a complex system of taxation? The answer really, maybe at a margin it may be happening, but definitely it's not generalized. So given the fact that we are talking of a situation where we're going to have a revenue neutral rate which is going to be imposed in terms of the GST. So generally all the price levels are going to remain more or less intact. There could be a tendency for there to be certain inflationary pressures for specific commodities. So if I don't see the prices really coming down, I don't see the demand increasing to really justify a higher increase in GDP. But definitely in terms of lots of activities which were not being recorded on account of this complex tax system, there could be a number of producers who would be entering this particular ambit of paying the taxes. To that extent, there could be an increase in your GDP. But in terms of an acceleration kind of scenario in GDP, I'm a bit skeptical. I would rather wait and watch whether it will really bring about an increase in GDP.
So, Shankar, way forward, what's the next part? So, I mean, should we be focusing on the aspect of the disease, so to speak, which is GST, or should we be addressing the larger problem as a country?
See, look at the fundamental fact here. Every party involved in the process of legislation has at one time proposed it and at one time opposed it. Every party agrees that this is good for the country. Every party agrees that this needs to be done, and yet they oppose it. What do you make of it? Can national good be subjugated to political good? So I think there is a genuine need now for legislators, parliamentarians, at least the statesmen in parliament, to come together and say, how do we resolve this kind of stuff? In 1997, P.S. Sangma held a meeting, a special session of parliament for the golden jubilee of independence. There every party endorsed that question hour will not be disrupted, calling attention motion, 0 hour, all this.
Right. So anyway, so you're saying that unless
now there is a real need to have a special session in parliament,
as is being proposed,
a real special need. This special session, we don't know where it's going to go, but I think political parties need to come together and list out 1, 2, 3, 4, 5. These are the things we will get done no matter how we differ with each other.
Right.
Conviction cannot be a matter of convenience.
Okay, fair enough. How do you see it, Kunal? What's the way forward?
Well,
I mean, what will the market sort of expect? How will it balance out its expectations?
From Shankar, I think, he mentioned very clearly that political cycles are different than economic cycles. Remember that over the last 1.5 years, what's notably been called as the bull market of India, there have been half of the sectors, you look at the internals of the markets, I think the metals have not done well, the real estate is still in a limbo, infrastructure has not picked up the way, most of us anticipated. So I think if you look at the health of this bull market, it's not 100% what people anticipated. So I think if there is any more delay in any sort of economic reforms or recovery for India, I think we could be threatening or this sort of a strong recovery. So I think GST or such other reforms over the next couple of months would be very critical for India. It can actually decide the trend for the next 3 to 5 years for the markets.
Right, and it's a very valid point. What you're saying is that if you look at the market in terms of more carefully, there are a lot of companies and sectors which could be affected by it, or are already being affected by the lack of efficiency there. Prashant, last word. What's the way forward?
I think the government also needs to up its act and inform everybody why GST is needed for the country. I think there is no that mass education program that has been undertaken such that the consumers will, want, the people of this country will demand that from the legislators. The industry is speaking about it, the people who are aware about the goods of the GST are speaking about it, but I think everybody should, if they believe that GST is going to be good for the country, should be demanding it.
Right.
And demanding it through legislative means, through appropriate measures taken there cannot be a unanimity, but a consensus needs to be built up on this, because all of these issues that have been raised, you cannot get a unanimity of views, and you have to build in a consensus and bring these acts.
10 seconds. Yeah.
If they calculate what is the per citizen benefit and put it out in public domain, I don't think any political party will dare oppose
Right.
this.
So per citizen benefit is something that we need to compute quickly and put it out there, because this is one critical reform that we are waiting for. We need to go in for a break, but we'll be back very shortly. Stay with us. Welcome back. Here with Policy Watch. China's central bank has slashed the value of its currency, the yuan, thrice this week between Tuesday and Thursday, devaluing it by 4.5%, triggering currency war fears. The impact on global currencies and several areas of the world economy is expected to be huge. The big question is, what could it mean for India? Here's a report.
A whopping 4% devaluation in its currency, a sharp weakening of the yuan that comes as the biggest export support measure since China devalued its currency by a third in 1994. Chinese exports fell 2.8% in May as imports dropped by over 18%, signals of the economy heading for a prolonged slowing down.
There is no doubt that China is responding to its own internal development, slowing down of the growth in exports, in order to give its economy a boost.
A cheaper yuan may spell trouble for India that has a huge trade deficit of over $48 billion with China in 2014-15. Experts say depreciation of the yuan could lead to dumping of cheap Chinese products in the country. At the same time, Indian exporters will find it tougher competing with Chinese products in the global market.
The devaluation of the Chinese currency would certainly make exports from China, attractive to some extent, to that extent. And we have to also see that it is that our industries which are producing engineering goods, manufactured goods, they need some form of relief also.
A partly convertible Indian rupee depreciated sharply this week, reaching the psychologically significant 65 against a dollar on Friday, its lowest since September 2013. Krishnanand Tripaঠি's report for Rajya Sabha Television.
Well, joining me now is Shankar Iyer, columnist and senior journalist, Anindya Banerjee, currency analyst at Kotak Securities, and DK Joshi, senior director and chief economist at CRISIL. Gentlemen, thank you very much for joining us. So, Anindya, let me begin with you. This is quite a surprising fall for the yuan as well as for the rupee, which was perhaps unexpected, or was it not?
The timing was a little unexpected, but as far as the event was concerned, it's not. For the simple reason that China has been facing outflow for the last 5 quarters. It is estimated that between $600 to $800 billion has gone out, and the FX reserves are down around 10% from the highs. So that's around $300 billion. So the question in front of the Chinese authorities was that would they continue to defend their own currency? Now they can do that. They have the reserves. The question is it required? Because every time you go and sell dollars, you will tighten the money supply. And at a time when the economy is slowing, the real interest rates are high, it's counterproductive. And secondly, I believe the whole point of trying to get to say a market-driven exchange rate has also played a role in this entire thing.
Okay, DK, what's the sense? I mean, so India, well, first of all, is it something that's going to be affecting us, and to that extent, should we be responding?
Well, I think first of all it is...
and we've closed above 65.
Yeah, we believe that it's a move towards structural reforms in the Chinese foreign exchange market rather than a move towards competitive devaluation.
Okay.
And I think China also wants to get into the SDR basket, and what is coming in the way is that the currency is not market determined. Now the timing suits them because I think this is the time when they need to boost exports. I think economy is not doing well. So in that sense, depreciation of the yuan suits Chinese and they will let it depreciate. But maybe not too much because they do it gradually. As far as India is concerned, not only India, I mean many other currencies.
I mean, many East Asian currencies have been hit worse.
Yeah, absolutely. So I think what the issue is, I mean, even if we respond to that, it's not going to help much. I mean, because what's constraining the exports is not currency alone. I mean, it's several other factors. First of all, you have the demand in the advanced part of the world, and also Asia pretty weak. So that's not going to improve. Second, I think the issue that constrains exports is the prices of many of the export items have tumbled. So I think that's getting reflected in dollar exports. And finally, I think there's a tendency towards, one can say towards protectionism, because while the world economies are growing, trade is not growing. So I think the trade intensity of global growth is reducing. So under these circumstances, some devaluation or depreciation of the rupee is not going to help much. I mean, that's my sense.
Right. And I'll come back to some of the other economic indicators that we've seen, including obviously lower inflation. Shankar, there's a basket of sort of good news and bad news, right? So where do you assess and where do you place this piece of this particular development of the last week?
Well, you know, it's an objective lesson that illustrates how the Chinese economy functions, how the Chinese political system functions. They have aligned their economic ambition with their global aspirations, or the economic aspiration with their global ambitions, and they've done what is necessary to be done. And this is a lesson that Indian policymakers and the government should imbibe, that outcome orientation is the only way out of the story, and you can't just jump from one boat to the other all the time. And I think the lesson in this in India is that unless you make your domestic economy competitive, get the solutions right, there's no point in talking about make in India, make for the world, make in for India, whatever. You have to get all your stories. So I always think that if we solved all our problems at home, from food economy to power to energy, whatever, you will get your pieces right and you will become competitive in the global economy. So I don't think there is a room for any knee-jerk reaction to the currency depreciation. Anyway, you are too thinly spread out. I mean, if China with $3 trillion and more of forex reserves is thinking strategically, India has to do that 10 times more.
Okay. Anindya, so let's ask a more practical question. So where do you see the rupee going in the near term?
See
and therefore, what's the market sort of looking, or how bearish or bullish is the market?
What we're expecting as a house is that the trend of the rupee will be downward, so it will have a depreciating bias. If we ignore the last 3 days movement, what RBI was trying to do was a very measured pace of depreciation, which sort of strikes a say balance between the internal and the external value of the rupee, the inflation objective and the competitiveness. But the last 3 days have sort of come as a big move in the dollar rupee. We believe that it will gradually move towards 66 and 66.5 by the year end. Now here the big if is that the devaluation of the yuan won't be disorderly, because it has a hint of being market driven. Now this is very different from what they did in 1994, where they did it on their own unilaterally, and where the government has a far bigger control. Here the market driven devaluations can get ugly at times.
Right.
So if that's the case, then the deposition.
So, so you're saying, but yeah. So the sense I'm getting from you is it's not looking like it's going to crash through the floor.
No,
for sure not. Okay. So DK, if we were to analyze the impact on the economy in general and maybe industry in specific, how does it stack up?
Well, I think some of the industries are already suffering because of several reasons. I mean, metals, particularly steel, etc., is because of the collapse in prices. Now I think it makes the domestic players even more uncompetitive, and government has responded to that by a duty hike, which
tariffs for steel.
I don't think that's going to help much, because the global prices have crashed. So I think it's and our trade imbalance with China is actually trade deficit has risen to something like $50 billion. And as far as the currency is concerned, if you look at the last 5-7 years, we've depreciated by I think 35 to 40% against the yuan, but that hasn't helped our trade with China. Actually, trade deficit has only widened. So that's why I want to bring in the fact that what Shankar was also saying, it's not the currency that's going to be the game changer. The game changer will be the other aspects of the economy which make you more competitive.
Right. So what's the good news, if any, at least at this point?
In the economy? Well, the good news is that inflation is coming down to those levels that RBI will be thinking again about a rate cut.
Yes, and then the market is also expecting a rate cut once again.
And WPI today also collapsed to minus 4.1%. And I think if you look at the core part of it, which reflects demand, that has also come down. So I think both in the CPI as well as in WPI, which essentially tells you that the demand is still very weak and the pricing power is, and this is core inflation takes out metals and other oil, etc. So it's not.
So if you were to that was the unpacked version. So if you were to pack all this back together, what does this mean? We've had a rupee depreciation, we've had inflation which is favorable, we've had IIP numbers looking a little better. So is it mean that things are stable, looking better?
Well, the economy will grind up, and I think a lot depends for the overall economy to move up a little faster is what happens to rains in the rest of August and in the month of September. If there's a positive surprise, you could get 30-40 basis point over 7.4% growth that we are expecting. Otherwise, I think it will be, we're already factoring in a weak monsoon. So I think monsoon is, as far as GDP is concerned, that's the most critical variable right now.
Right. So you're saying to that extent, the yuan depreciation and its impact on the rupee is not so significant as
of now, because we've already seen exports plunging. I mean, how much more they'll plunge? I mean, already the first quarter has seen minus 15% growth. I think the next 3 quarters won't be worse than that.
But it's also, as Shankar says, exposing our fundamental non-competitiveness.
Yeah, I think we have been. I mean, it's getting reflected in many sectors as well. I mean, textiles, etc., where we were competitive, our revealed comparative advantage has been coming down. We are becoming a little more competitive in automobiles, etc. But that is still, I think, we are not at that level that we can say that we are competitive. But it's improving slowly.
Okay, so Shankar, I mean, there will always be a tendency to respond emotionally to situations like this. Should we be responding emotionally, or should we be?
Well, I'm glad none of the ministers in the government who were testosterone driven on the value of the rupee have spoken up. So the good news really is that this is a good wake up call. What I think
and direct emotions elsewhere. I mean, I guess
direct the emotion. I think the cautionary bridge I want to place here is that I'm very distinctly uncomfortable with the precipitous fall in the WPI rate and in the consistent slowing of the CPI rate. I think there is a serious demand issue in the economy which has to be addressed. I think this government has to migrate from slogans to solutions. This is not happening. I mean, there is some movement somewhere. I think the whole idea of Make in India is a great slogan to re-energize the economy, but it can't be now viewed only sectorally as if reviving manufacturing or job creation or whatever. I think the way government uses money, deploys money, that efficiency will be called into question now.
Okay. DK, what's the way forward?
Well, for the economy, I think we need to push public investments up, because that's very obvious that private sector is not going to invest until the utilization of capacity, which is at a 5-year low right now, picks up, and that can only pick up if demand picks up.
Right.
So government has a role here very clearly laid out for itself. So whatever they have said on infrastructure, front loading infrastructure, I think it's happening partly in roads.
Right.
It has to happen in other segments also.
Right. So okay. So as it's a wake up call once again to sort out a few things on the fundamental side, the basic or the demand side rather. I think you talked about a worst case in a way where you said it could go, but is there a best case? Could things actually go the other way?
Yes, it can. Say for example, the RBI is talking about hiking the FI debt limit. If that happens, close to $6 to $7 billion could flow in the government bonds, and also there is a huge expectation that RBI could go for a mid-policy cut. So if say those two converge, it could be a say best case scenario, but the RBI won't allow it to appreciate, in our opinion, beyond 63.70, because at this scenario to go below 64, it's highly uncompetitive.
Okay, right. We've run out of time, unfortunately. Thank you so much. On a fairly positive note, am I right, DK?
Well, yeah, I think it's mildly positive. I would say.
I mean the markets are up 500 points. So although for expectation of a rate cut and perhaps some likely reintroduction of the GST bill.
Yeah, so but a rate cut won't help much. I think we should keep that in mind. The transmission is both delayed and diluted.
Right.
So I think unless that picks place.
Thank you so much. We run out of time. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.